Hello everyone, my name is Robin. I'm here to present on a topic regarding corporate assignment. So this topic was given to us by our own professor. The assignment is regarding the study related to the concepts linked to the corporate assignment. It's basically about the estimation of the taxation of the business organizations. For this, we had to select an ASX listed company. So for that, we also had to do the annual report of the company. Should be analyzed and understanding the deferred tax assets and liabilities. So moving into presentation, I have made a small PowerPoint presentation here. I can't be able to show you the PowerPoint presentation as of very clearly, as I don't have a projector as of now. So the introduction is basically this report is about the study of a corporate accounting and the issues related to the income tax. For this, AUB Group has been selected, which deals with providing the financial services to the organizations, which offer the services such as equity-based risk management, insurance broking, specialist underwriting agencies, and also focuses on providing the risk solutions to the clients. This report shows the accounting of the income tax related to the AUB Group. Report also shows about the knowledge related to the different corporate accounting, along with the understanding the topic of deferred tax liabilities and assets. This also describes about the differences among the temporary and the permanent differences by taking examples from the AUB Group itself. This report reflects about the deferred tax assets and liabilities of a business firm, which can be identified in the financial statements of the business. So without any further delay, I'd like to straight dive into the topic. First of all, we'd like to talk about accounting profits. So accounting profits basically is the total income which has been earned by a business organization, which is calculated in accordance to the GAAP or the generally accepted accounting principle. So it's accounting profits are basically the total earning by a business organization, calculated obviously followed by the GAAP principles. These profits can involve some of the explicit costs as well for the purpose of doing the business. For example, like depreciation, interest, operating expenditure, and the taxes. So accounting profits, to summarize, accounting profits should be all about that. Taxable profits, talking about the difference between accounting profits and taxable profits. Taxable profits shows the taxable profits or the tax profit that can be utilized for showcasing the difference among the accounting earnings or the profits. So there is a difference between the accounting and the taxable profits, and we'll talk about the temporary differences. So the difference can be understood by carrying amount related to the assets and liabilities, which can come under the balance sheet and also in the tax page of the firm. So there are two types of temporary differences. I'll go through the two types of differences in the next slide. First of all, the taxable temporary difference is the different which would assess. So it's basically a difference which would assist in yielding the taxable amount in the future period during the determination of the profit or the loss which is taxable. So it's basically the difference which will be yielded in the future, which is either a profit or a loss which is taxable in the near future. The other one is the deductible temporary difference. So the first one was taxable temporary difference, the second one is deductible temporary difference. So the deductible temporary difference shows the difference which would yield amount that would be deducted in the future period during the determination of the taxable profit or losses. So it sounds similar, both the concepts, but deductible temporary difference will be deducted in the future period, which will determine the taxable profit or the loss. Talking more onto the topic, we'll talk about deferred tax assets and deferred tax liabilities. So first of all, deferred tax assets. So what are deferred tax assets? These are the items which can be identified in the balance sheet. So they are obviously in the balance sheet of any company, which would be because of the overpayments or the payment made in advance related to the taxes. So it's basically the overpayment or the advance payment paid to the taxes. The recognition criteria. So how do you recognize deferred tax assets? So the recognition criteria of the DTA is when the book profits of the firm are less than the taxable profits, then in such cases deferred tax assets would be created. So the criteria for determining the DTA would be when the book profits of firm are less than the taxable profit. Then comes deferred tax liability. Deferred tax liability can be understood as the taxes which could have been assessed or which are due to for the current time period but have not been paid. So obviously liability are something which has not been paid. So similar to that, deferred tax liability are the taxes which have been assessed but have not been paid at the current time frame. So how do you recognize DTL or a deferred tax liability? So the DTL can be recognized in a business form based on the differences in accounting related to earning before any kind of payments related to tax. So it's basically the earning before related to before any kind of payment related to tax. So just giving you a little bit of scenario on that. When a business organization have to pay the taxes for different kinds of financial events and which has not been concluded yet, then such kind of obligation are carried forward to the next year under which that transaction will be completed. So the obviously the DTL is carried forward to the next coming financial year. Moving forward, the form's tax expenses, the form that I chose myself is AUB form. So according to the financial statement of the AUB group, it has shown that income tax expense under the income statement in which is shown as 12,958,000, 12,176,000 in respect of 2018, 2019 and 2018 respectively. All the details are mentioned obviously in the report as well. So obviously the 30% of tax margin is on the net profit of that income. So 30% of tax would be charged on the net profit amount. That's amounting to 6.2 million roundabout and 6.8 million roundabout 2019 and 2018 year respectively. In accordance to that, the taxable amount, the tax would be around about 1.8 million and also would be about 2 million respectively for the year 2019 and 2018. Obviously the numbers are mentioned as well. So the reasons for the accurate income tax, so obviously there's a difference in tax expense and corporate tax. The reasons for that can be the income tax is not accessible because of the unamortized value related to the book or registers, obviously the deferred tax, and they all come under the deferred tax liability. The other reasons can be the relation to the taxation and disposal of the acquisition of the control entities. Moving forward, the DTA and L of AUB, so the financial positions of the company has been clearly shown under the liabilities and the total current liabilities and total current assets section. The deferred tax asset has been also identified on the balance sheet of the heading of the non-current assets. Moving forward, yes, there is an income tax payable amount for AUB, so it's already clearly mentioned on the balance sheet of the company, which shows the income tax payable of the heading as under liabilities as well of 2019 and 2018 respectively. The income flow and cash flow statement, yes, there are dissimilarities in the income tax paid and income tax which is under the cash flow statement. The reasons for the differences between the two is because of the amountage charged on the exact amount of the cash inflow and outflow of the company over the year. The reasons for the differences have been occurred to various reasons such as rebatable dividends, equity accounted income, non-taxable distributions, income tax on the overseas operations, adjustment in relation to the fair value of the organization, so on and so forth. And there's also a temporary and permanent differences. Temporary and permanent differences, they are both recognized under AUB groups. In the annual report, it has been stated that the deferred income tax is given on all the differences which are temporary in accordance to the date of the financial position among the tax bases in relation to the liabilities and assets, and also the carrying amount for the purpose of reporting. So obviously, when the temporary difference related to the deductible one occurs from the early recognition of the assets or the liabilities under a transaction which is not the business combination. So obviously the numbers and figures are given there, and I've given it to the report and also in the presentation as well. So the reflection that I made by doing this presentation or by doing this report under 3 months time is, and the interesting that I found is the deferred tax assets and the liabilities can occur because of the overpayment or the advance payment of the tax. The surprising thing that I identified is obviously the difference that has been shown on the cash flow statement and the income statement under the AUB group's income statement and cash flow statement. The difficult thing for me is obviously finding the concepts related to the temporary and permanent difference, which was a little bit tricky for I guess for all of our students, but it's explained clearly in the reports. Although there were temporary differences in relation to the taxation in the financial statement, but I was also not clear about the difference among the permanent and the temporary difference. The new insights, obviously, learning about the temporary and permanent difference of the AUB group. The conclusion that I would like to make is the reports have made the analysis of business organization for which the organization have been chosen, the AUB, and there are several reasons for the differences in the amounts, which have been obviously explained in detail in the presentation as well. Concepts related to DTA and DTL have been studied as well. The concepts of temporary and the permanent differences have been also discussed. I would like to thank my professor for giving me this wonderful opportunity, and thank you all. You have a good day.